Listen very carefully, because what I'm about to share with you this morning is going to fundamentally change the way you think about your money, your future, and everything you thought you knew about the global economy over the next 12 months. I have spent the last 72 hours going through internal research data that most people will never see. I have been on calls with people who work inside the system, people who see the numbers before they become public. And what they have confirmed to me is something that the mainstream media is deliberately not telling you, because if they told you the truth, there would be panic in the streets and the banks would lose control of the narrative. So before you do anything, before you click anything, before you open your brokerage account, before you text your friend about some stock tip, I need you to sit down, shut everything else off, and give me your full undivided attention. Because this is not entertainment, this is not a game, this is a survival briefing for your financial future. And if you ignore what I am about to say, you are going to be one of the people who looks back 12 months from now and says, I wish I had listened, I wish I had paid attention, I wish I had done something when I still had the chance. Right now, as we speak, the biggest wealth transfer in modern history is happening right under everyone's noses. And nobody sees it because they are too busy being emotional, too busy reacting to every single news cycle instead of stepping back and looking at the bigger picture. And that is exactly what the system wants you to do. The system wants you confused, the system wants you scared, the system wants you frozen in place, doing nothing, while the smart money, the institutional money, the people who actually understand how this game works, are quietly positioning themselves to make an absolute fortune over the next 12 to 24 months. And I am not going to sugarcoat this for you. I am not going to tell you what you want to hear. I am going to tell you what you need to hear. Because the difference between those two things is the difference between building generational wealth and watching your savings evaporate in real time while you sit there paralyzed by fear doing absolutely nothing. But here is where it gets wild, okay? Stay with me, because I need to walk you through this step by step. And if you leave before I finish, you are going to miss the most important part, the part that could literally change your financial trajectory for the rest of your life. The global geopolitical landscape right now is the most unstable. It has been since the end of the Cold War. And I am not saying that to scare you. I am saying that because it is an objective fact that you can verify yourself if you spend 5 minutes looking at the data. We have active military conflicts on multiple continents. We have trade wars escalating between the world's largest economies. We have supply chains that were already fragile from the pandemic being stretched to their absolute breaking point. We have central banks trapped in a position where they cannot cut rates because of inflationary pressure, but they also cannot raise rates because the economy is showing signs of weakness. And that is the exact definition of being stuck between a rock and a hard place. And when central banks are stuck, the markets get volatile. And when markets get volatile, the vast majority of retail investors do the absolute worst thing possible. They panic, they sell at the bottom, they move to cash, and they sit there watching as the recovery happens without them, while the people who understood what was happening are counting their returns and building wealth that will last for generations. I have seen this movie before. I have seen it play out in 2003. I have seen it play out in 2008. I have seen it play out in 2020. I have seen it play out in 2022. And every single time, the script is identical. The media screams that the world is ending. The average person sells everything. The smart money buys the dip, and then 12 to 18 months later, the market is at new all-time highs, and the people who panicked are left holding nothing, wondering what happened and asking themselves why they did not see it coming. This time is not different. It is never different. The mechanics of markets have not changed in over 100 years, and they are not going to change now. Just because the headlines are louder than usual, just because the fear feels more real this time, just because everyone around you is telling you to run for the exits. Let me show you something that is going to blow your mind, because this is the part that nobody talks about. This is the part that your bank will never show you. This is the part that the financial media deliberately ignores, because it does not generate clicks. It does not keep you glued to the screen. It does not make you feel afraid. And fear is what drives ratings. Fear is what drives engagement. Fear is what keeps the advertising dollars flowing. When you look at every single major geopolitical crisis of the past 30 years, from the Gulf War to the Iraq invasion to the Arab Spring to the Crimea annexation to the Syria conflict to the Ukraine war, there is one pattern that repeats with almost mathematical precision. The market dips sharply in the first 30 to 45 days of the crisis. Retail investors panic and sell institutions, and smart money buy aggressively. And then within 12 months, the market is back to where it started or higher. Every single time without exception. This is not opinion. This is not hopium. This is not copium. This is hard, verifiable data that anyone can look up if they bother to do the work, instead of just reacting emotionally to whatever headline they saw this morning. 70 wars in 30 years. Can you believe that? We have had 70 wars in the past 30 years, 70 conflicts that the media told us would change everything, that would crash the economy, that would end the bull market. And during those 70 wars, the S&P 500 went from 470 to 6,900. That is 1,200%. The NASDAQ went from 1,000 to 23,000. That is 2,000% 70 wars. And the market did that just by sitting in an index, just by not panicking, just by understanding that wars do not destroy economies. They create temporary dislocations that smart investors use to accumulate assets at a discount. This is not complicated. This is not some secret formula. This is just basic pattern recognition that anyone can see if they take the time to look at the data instead of listening to talking heads on television who are paid to keep you scared. But most people will not do the work. Most people would rather watch a 30-second clip on social media that confirms their fear and then make a life-altering financial decision based on emotion rather than evidence. And that is exactly why most people never build real wealth. That is exactly why the wealth gap keeps getting wider every single year. That is exactly why the rich keep getting richer, while everyone else stays stuck in the same place, complaining about the system, instead of learning how to use the system to their advantage. Now let me talk about what is actually driving the fear right now, because if you understand the mechanics, you will understand why the fear is overblown and why this represents one of the best buying opportunities we have seen in years. The number one driver is energy prices, and specifically oil. Whenever there is a conflict in or near the Middle East, the price of oil spikes, and when oil spikes, everything else follows, because energy is the foundation of the entire global economy. Everything we produce, everything we transport, everything we consume has an energy cost attached to it. So when oil goes up, the cost of everything goes up, and that creates inflationary pressure. And inflationary pressure is the one thing that central banks are terrified of, because inflation destroys purchasing power. And when purchasing power gets destroyed, consumers pull back and the economy slows down. And when the economy slows down, you get the word that nobody wants to say, you get recession. But here is what most people do not understand about oil prices, and this is critical. So pay very close attention, because this is the key to understanding why the current panic is completely overblown. Oil price spikes during wars are temporary. They are always temporary, and I can prove it with data that goes back decades. In the Gulf War, oil went from $17 a barrel to $40 a barrel, a massive spike that terrified everyone. The media was screaming about energy crisis and economic collapse, and then within 12 months it was back down to $20. In the 2003 Iraq invasion, oil spiked 80% in a matter of weeks. Everyone was panicking, everyone was selling, and then within 8 weeks it had dropped 34%, and within a year it was back to pre-war levels. In the Russia-Ukraine conflict in 2022, oil went from $74 to $130 per barrel. Everyone was screaming about energy crisis and the end of the world, and within 12 months it was back at $80. And then for the next 4 years, it did absolutely nothing. 0% returns from that spike onward, 4 years of nothing. After all that panic, after all that fear, after all those people who sold their portfolios because they thought oil prices would stay elevated forever. Do you see the pattern? Every single time oil spikes during a geopolitical crisis, and every single time it comes back down. And every single time the people who panicked and sold their stocks because of high oil prices ended up being wrong. And the people who used the dip to buy quality assets ended up being right. This is not a coincidence. This is how markets work. This is the fundamental mechanics of supply and demand playing out over and over again in a cycle that has been repeating for as long as markets have existed, and it is going to keep repeating, because human nature does not change. Fear and greed do not change the basic laws of economics. Do not change. Now let me explain why oil always comes back down, because this is the part that will give you confidence when everyone else is losing their minds. This is the part that will help you stay calm when the headlines are screaming that the world is ending. First, the global oil market is not as fragile as the media makes it seem. Yes, there are choke points. Yes, there are supply disruptions during conflicts, but the global oil infrastructure is massive and it has enormous redundancy built into it. There are strategic petroleum reserves in every major economy that can be released within days. There are alternative shipping routes that can be activated within weeks. There are domestic production capabilities in multiple countries that can be ramped up quickly. The United States alone is the #1 oil producer in the world, and when oil prices spike, American producers have every incentive to increase output, because high oil prices are incredibly profitable for them. So the very thing that everyone is afraid of, high oil prices, actually triggers a supply response that brings prices back down. It is a self-correcting mechanism, and it works every single time, without fail. Second, and this is something that most people completely overlook, when a country or a group tries to disrupt oil supply through military action, they are almost always hurting themselves more than they are hurting anyone else, because modern economies are interconnected in ways that make economic self-harm almost inevitable when you try to weaponize energy. Any nation that tries to shut down a major oil transit route is also shutting down its own economic lifeline, because they depend on that same route to export their own resources. It is the equivalent of setting your own house on fire to annoy your neighbor. It does not work long term, and it always ends with the person who started the fire suffering the most. Any economy that is 100% dependent on oil exports cannot afford to close down the very routes it uses to sell that oil to the world. It is economic suicide, and no government, no matter how aggressive, can sustain that position for more than a few weeks before the internal pressure becomes unbearable, before the money runs out, before the population starts demanding that the government reverse course. Third, and this is the geopolitical reality that the media will never explain to you properly, because it does not fit the fear narrative. The major world powers have an absolute non-negotiable strategic interest in keeping global energy routes open. This is not optional for them. This is existential. The United States, the European Union, China, Japan, South Korea, every major economy on the planet depends on the free flow of energy, and they will use whatever means necessary to ensure that flow continues. That means naval deployments. That means diplomatic pressure. That means economic sanctions. That means military action if necessary, because allowing a permanent disruption to global energy supply is simply not something that any major power will tolerate. The military assets are already in position. The naval capabilities are already deployed. The strategic framework for reopening critical choke points has been rehearsed and planned for decades. It has never happened that a major energy route was permanently closed by a regional conflict, and it is not going to happen now because the forces arrayed against that outcome are simply too powerful. But here is where it gets really interesting, and this is where everything comes together. So stay with me, because this next part is where the real money is made. This is where the opportunity becomes crystal clear. The fear right now is not just about oil. The fear is about what oil prices mean for central bank policy, and that is where the real anxiety is coming from. Let me break this down for you in simple terms, because I think a lot of people overcomplicate this. The job numbers that came out recently were weak, which normally would be a signal for the Fed to cut rates, because cutting rates stimulates hiring and spending and economic activity. When you cut rates, you flood the system with cheap money. You make it easier for businesses to borrow and expand. You make it easier for consumers to spend. You create a virtuous cycle of economic growth. So weak job numbers in a normal environment would actually be good news for the stock market, because everyone would be pricing in rate cuts, and rate cuts are rocket fuel for asset prices. But at the same time, oil prices are spiking, which is creating inflationary pressure, and cutting rates into inflationary pressure is something that no responsible central bank will do, because it would make inflation worse. It would pour gasoline on the fire. So the Fed is stuck. They cannot cut because of oil. They cannot raise because of weak jobs. They are literally frozen in place. And when the Fed is frozen, the market gets nervous, because the market was expecting rate cuts. The market was pricing in relief. And now that relief is not coming, at least not immediately, and that uncertainty is what is driving the sell-off. That uncertainty is what is creating the fear. But here is what the market is not pricing in, and this is the key insight that separates the people who are going to make money from the people who are going to lose money over the next 12 months. The market is pricing in a scenario where oil stays elevated forever, where the Fed never cuts, where the economy slides into stagflation, where everything goes to zero, and that scenario is not going to happen. I am telling you with absolute certainty, based on every historical precedent we have, based on the data I have shown you, based on the mechanics of how markets and geopolitics actually work, that this scenario is a fantasy. It is fear-based projection. It is not grounded in reality. Oil will come down. It always does. I have shown you the data. The Fed will cut when oil comes down, and they will probably cut aggressively because they are already behind the curve, and they know it. The economy will respond to rate cuts because it always does, and the market will rip higher because it always does after a geopolitical fear-driven sell-off. This is not hope. This is not wishful thinking. This is the same playbook that has worked every single time for the past 80 years, and I see zero reason why it would not work this time. Now let me talk about the wealth transfer that is happening right now, because this is the part that should make you angry if you are sitting in cash, and it should make you excited if you are ready to take action. Right now as we speak, institutional investors, hedge funds, sovereign wealth funds, family offices, and ultra-high net worth individuals are buying. They are buying aggressively, and they are buying the exact same stocks that retail investors are panic selling. Do you understand what that means? That means the richest and most sophisticated investors in the world are looking at the exact same situation that you are looking at, and they are reaching the exact opposite conclusion that the average person is reaching. The average person sees fear and runs. The institutional investor sees fear and buys, because they know that fear creates discounts, and discounts create generational wealth. They have seen this movie before. They know how it ends, and they are positioning themselves accordingly while everyone else panics. This is the wealth transfer I am talking about. Every geopolitical crisis is a mechanism for transferring assets from the hands of scared, emotional, short-term thinkers into the hands of patient, strategic, long-term investors, and this one is no different. Right now, at this very moment, wealth is being transferred, and you get to choose which side of that transfer you are on. You can be the person selling at the bottom driven by fear and headlines, or you can be the person buying at the bottom driven by data and historical precedent. The choice is yours, but make no mistake, there is no neutral option. Sitting in cash is not neutral. Sitting in cash is choosing to lose because inflation is eating your purchasing power every single day that you sit there doing nothing. Let me give you the numbers because I think this point needs to be driven home with hard data. If you stay in 100% cash for the next 10 years, you are going to lose approximately 45% of your purchasing power to inflation alone. That means the money you have today will buy 45% less stuff in 10 years, even if you do not spend a single dollar of it. It is a guaranteed loss. There is no way around it. Cash is not safety. Cash is a slow bleed. It is a death spiral for your wealth. And the only people who do not understand this are the people who have never looked at the data, the people who have never done the math, the people who think that sitting on the sidelines is a safe strategy, when in reality it is the most dangerous strategy of all. Now compare that to what happens if you invest during a geopolitical crisis. If you had invested $100 per week into the S&P 500 starting in the year 2000, which by the way was literally the worst possible time to start investing because that was the peak of the dot-com bubble, and you continued investing through the dot-com crash, through the subprime crisis, through COVID, through every war and every crisis of the past 25 years, you would have returned over 500% on your money. 500% through the worst possible sequence of events, through two of the worst market crashes in history, through a global pandemic, through multiple wars, through everything. And if you look at just the past 15 years, which includes the Syria conflict, the Ukraine war, COVID, bear markets, and everything else, the S&P returned over 700%, 700% in 15 years just by buying consistently and not panicking. That is the cheat code, that is the secret that the top 1% of investors use. And it is so simple that most people refuse to believe it works. They think there has to be something more complicated. They think they need to find the next hot stock. They think they need to time the market perfectly, and they end up doing nothing, or worse, they end up buying high and selling low, which is the exact opposite of what you should be doing. Now, let me address the objections, because I know exactly what some of you are thinking right now. Some of you are thinking, but this time is different. This war is bigger. This crisis is more serious. The geopolitical situation is more dangerous than anything we have seen before. And to that, I say you are wrong, and I can prove it because people have said this time is different during every single crisis in modern history. They said it during World War II. They said it during the Korean War. They said it during the Cuban Missile Crisis. They said it during Vietnam. They said it during the oil embargo of the 1970s. They said it during the Gulf War. They said it during 9/11. They said it during the Iraq invasion. They said it during the financial crisis. They said it during COVID. They said it during the Ukraine war. And every single time they were wrong. Every single time the markets recovered and went to new highs, and every single time the people who said this time is different were left behind holding cash while everyone else built wealth. The other objection I hear is, but what if the market drops more? What if this is just the beginning of a bigger crash? And to that, I say good. If the market drops more, that is more buying opportunity. If you are investing with a 5 to 10 year time horizon, which is the only time horizon that makes sense for building real wealth, then a further drop in the market is not a threat. It is a gift. It means you get to buy more shares at lower prices, which means your future returns will be even higher. This is basic math. If you buy something for less, you make more when it goes up, and the market will go up because it always goes up over the long term, always without exception. There has never been a 20-year period in the history of the S&P 500 where you lost money, never, not once in over 100 years of data. And for the people who are worried about stagflation, let me address that directly because I know the media loves to throw that word around. Stagflation is extremely rare. It has only happened once in the past 50 years during the 1970s, and the conditions that caused it were very specific and very different from what we have today. Second, even during the stagflation of the 1970s, the market eventually recovered and went on to have one of the greatest bull runs in history during the 1980s. Third, and most importantly, the current situation does not have the structural characteristics of a stagflationary environment. The labor market, while showing some weakness, is still fundamentally sound. Consumer spending is still relatively healthy, and the inflationary pressure from oil is temporary, as I have shown you with decades of data. So while the media loves to throw around the word stagflation because it scares people and scared people watch more news, the actual probability of a true stagflationary environment developing from this situation is very low. Now here is what not to do, because I think this is just as important as knowing what to do. Do not make decisions based on headlines. The media is designed to generate attention, and fear generates more attention than anything else. So the media has a massive incentive to make everything sound as scary as possible. They are not necessarily lying to you, but they are presenting information in a way that is designed to maximize your emotional response rather than your understanding, and making financial decisions based on emotional responses to headlines is the fastest way to destroy your wealth. Do not listen to the people on social media who are telling you the world is ending. These people are either genuinely scared and projecting their fear onto you, or they are deliberately trying to scare you because fear generates engagement and engagement generates revenue. Either way, their advice is worthless because it is based on emotion, not data. Do not try to trade around the news. Do not try to short the market. Do not try to buy options to profit from volatility unless you are a professional trader with years of experience and a proven track record. These strategies are extremely risky, and the vast majority of people who try them lose money, especially during periods of high volatility. Do not sell your long-term investments to go to cash. This is the single most destructive thing you can do during a geopolitical crisis because you are locking in losses at the worst possible time, and you are guaranteeing that you will miss the recovery that always follows. Every single person who sold during a geopolitical crisis and went to cash has regretted it every single time, without exception, and do not do nothing. Doing nothing feels safe, but it is not safe because inflation is destroying your purchasing power every single day, and because the buying opportunity that exists right now will not exist forever. The window is open right now, but it will not stay open for long. So here is my plan, and I am going to lay it out for you as clearly as I possibly can. Step 1 is to assess your financial situation. Make sure you have an emergency fund of 3 to 6 months of expenses in cash. This is non-negotiable. You need this safety net before you invest anything because if something unexpected happens, you do not want to be forced to sell your investments at a bad time. Step 2 is to determine how much money you can invest consistently every week or every month. This should be money that you do not need for at least 5 years, preferably 10. It does not matter if it is $50 a week or $5,000 a week. What matters is that it is consistent and that you can maintain it regardless of what the market does. Step 3 is to start dollar cost averaging into quality assets immediately. Do not wait for the bottom. Do not try to time it. Just start buying. If the market drops more, buy more. If the market goes up, buy at the higher price. Over time, your average cost will be lower than any single entry point you could have picked, and your returns will compound over years and decades. Step 4 is to increase your buying when fear is at maximum. When the fear and greed index is showing extreme fear, when the headlines are the scariest, when everyone around you is telling you to sell, that is when you should be buying more aggressively. Not all in, not recklessly, but more than your usual amount because those are the moments when assets are most discounted. Step 5 is to be patient and trust the process. This is a 5 to 10 year strategy, not a 5 to 10 day strategy. There will be periods where your portfolio is down. There will be periods where it feels like the strategy is not working. There will be periods where you are tempted to give up and sell. But if you stick with it, if you continue buying consistently, if you trust the data and ignore the noise, you will come out the other side with significantly more wealth than you have today. And step 6, and this is the most important step of all, educate yourself. Spend time learning how markets actually work. Spend time studying financial history. Spend time understanding the mechanics of monetary policy and interest rates and inflation and supply and demand. Because when you understand these things, the noise becomes irrelevant, the fear becomes manageable, and the opportunities become obvious. The reason I am able to stay calm during periods like this is not because I am smarter than anyone else. It is because I have studied the data and I know what the data says. And the data says that this is a buying opportunity, just like every other geopolitical crisis has been a buying opportunity. The current conflict, like every conflict before it will end, all wars end. That is the one absolute certainty in geopolitics. And when this war ends, the supply disruptions will normalize, oil prices will come back down, central banks will resume their rate-cutting cycles, and the economy will enter a period of recovery and growth. That is not a prediction. That is just what happens every single time the pattern has not broken in over 80 years, and I see no evidence that it is going to break. Now, so stop monitoring the situation from the sidelines. Stop waiting for permission from the media to feel okay about investing. Stop looking for certainty in a world that will never give you certainty. The only certainty you will ever have is the certainty that comes from studying history, understanding data, and trusting a process that has worked for over a century. This is the window, this is the moment, and it will not last forever. The fear will subside, the prices will recover, and the opportunity will close. And when it does, you want to be on the right side of the trade. You want to be holding quality assets that you bought at a discount, not sitting in cash wondering what happened. The choice is yours. Make it wisely. Make it now. And do not let fear steal your future, because that is exactly what fear is designed to do. And the only people who win are the ones who refuse to let it control them.